after wringing the mixture out with cloth, the gold begins to appear. That shiny silver layer you see? That's mercury. Once it's heated, the mercury evaporates, leaving behind a golden yellow hue. For decades, Tanzania's mining sector stayed under the radar, overshadowed by heavyweights like South Africa, Ghana, and Sudan. That changed with one announcement: the Nyanzaga Gold Mine, a $523 million project reshaping Tanzania's economy and shaking up Africa's mining landscape. What stands out isn't just the scale of the investment, but how it's being done. Perseus Mining, an Australian company with long experience in Africa, is funding the entire project itself, something rarely seen in an industry that usually depends on joint ventures or syndicated loans. This move reflects strong confidence in both Tanzania's untapped mineral reserves and its stable political and regulatory climate. It marks a turning point, the first major gold project in 17 years, and puts Tanzania back on the map among top gold producers. Until now, the focus has been on sustaining existing output. Nyanzaga shifts the narrative. The numbers are big. Starting in 2028, the open-pit mine is expected to produce 200,000 ounces annually, peaking at 246,000, and generating 2 million ounces over its 11-year life. Financially, it offers a projected internal rate of return between 19% and 34%, with a potential net present value of up to $617 million. Nyanzaga's strong profitability ranks it among Africa's top new gold projects, but the ownership model is just as striking. Tanzania's government holds a 20% stake, making it an equity partner, not just a tax recipient. This ensures a share of the profit stays in-country, supporting development rather than flowing entirely abroad. It's a shift from the one-sided deals that have long drawn criticism across the continent. On the ground, the transformation is already visible. New roads, worker housing, and a 53-kilometer power line are taking shape. The project also includes early investments in resettlement and local infrastructure, reflecting growing pressure on mining ventures to benefit communities, not just shareholders. This isn't just a gold story, it's about influence and control. Tanzania is signaling a shift from simply exporting raw materials to adding value at home. By prioritizing local mineral processing, it joins a growing group of African nations, like Burkina Faso under President Ibrahim Traore, pushing back against exploitative deals and demanding more from their natural wealth. Nyanzaga raises a key question: is this just one big project or the start of a broader push for resource sovereignty across Africa? More than a new mine, Nyanzaga marks a strategic shift in how Tanzania approaches resource development. While headlines focused on the $523 million price tag and ownership structure, the real story lies in its model. Unlike most African gold projects backed by foreign loans, Nyanzaga is fully funded by Perseus Mining through cash and bullion reserves. This self-reliance cuts external risk and speeds up development, while signaling confidence in Tanzania's political and legal stability, factors that matter to serious investors. Nyanzaga is strategically located in the Lake Victoria gold fields, a region rich in deposits but less developed than neighboring belts in Kenya and Uganda. Its location highlights Tanzania's untapped geological potential. With modern survey tools and extraction methods, the project could serve as a model for future large-scale mining across the country. Operationally, Nyanzaga is built for efficiency and longevity. The open-pit mine will process millions of tons annually, using digital control systems and modern environmental safeguards like water recycling, dust suppression, and strict tailings management. It reflects a broader shift toward more sustainable mining practices. The supporting infrastructure is equally ambitious. A 53-kilometer power line will not only serve the mine but also boost electricity access for nearby communities. New roads, logistics hubs, and worker housing are designed to last beyond the life of the mine, creating lasting value for the region. But Nyanzaga's impact goes beyond physical assets. The project prioritizes Tanzanian labor, technical training, and local procurement. It's a move toward building a homegrown mining services industry, reducing reliance on foreign contractors and embedding long-term skills in the local economy. In the broader African context, Nyanzaga reflects the continent's growing push for resource sovereignty. Leaders like Ibrahim Traore have championed local control and value addition, fueling wider debate on resource management. Tanzania's approach is more cooperative than combative, but it shares the same goals: local ownership, in-country processing, and deeper economic integration. Nyanzaga isn't just a gold project, it's a strategic move toward economic diversification and resilience. If executed well, it could help position Tanzania among resource-rich nations using their natural wealth to drive industrialization and social progress. And with high global gold prices and rising calls for reform across Africa, the timing couldn't be better. Nyanzaga may mark the start of Tanzania's mining revival. The project's scale is impressive, but its real impact lies in what it offers ordinary Tanzanians. Large resource projects in Africa have often operated as isolated enclaves, offering little to nearby communities. Nyanzaga aims to change that, with local economic growth and social development built into its strategy. Job creation will be one of the most immediate benefits. Thousands of roles, from general labor to skilled trades and technical positions, will open up during construction and continue throughout the mine's lifespan. A decade or more of demand for electricians, welders, mechanics, engineers, and IT specialists means stable, long-term employment. Perseus Mining has also committed to skills transfer programs, helping Tanzanians move into supervisory and management roles over time. Financially, the benefits are just as clear. With a 20% equity stake, Tanzania won't just collect taxes and royalties, it will receive direct dividends. This is a step away from past deals where governments saw little return. Combined with tax revenue and export duties, Nyanzaga could generate hundreds of millions annually, funding schools, hospitals, and infrastructure across the country. Beyond the new roads and power line, Nyanzaga is already bringing lasting infrastructure to nearby communities. The project includes resettlement plans with compensation, new housing, and access to schools, clinics, and clean water, developed not as short-term gestures but as permanent facilities managed with local authorities. The goal is to leave a lasting positive impact, even after the mine closes. Another major benefit is the boost to local business. Running a large-scale mine requires a wide supply chain, from fuel and maintenance to catering and transport. By sourcing locally, Nyanzaga can help spark new small and medium enterprises. Farmers supplying food to camps or logistics firms handling deliveries will see steady demand, laying the groundwork for broader economic growth. Nyanzaga's environmental and social governance (ESG) commitments are built in from the start, with safeguards and community consultations aimed at preventing the disputes that have stalled other African mining projects. This matters, not just for avoiding conflict, but for building the investor trust and local support that determine long-term success. The project could set a new standard for responsible mining in East Africa, attracting more investment over time. Its approach reflects a broader shift across the continent. While leaders like Ibrahim Traore push for state-led resource control, Tanzania is taking a collaborative route, combining foreign investment with strong local ownership and community focus. Different models, but the same goal: making sure natural wealth benefits the people, not just outside investors. As Nyanzaga nears production, its economic impact will grow. Jobs, infrastructure, and local business opportunities are expected to boost spending, strengthen regional economies, and attract more investors to Tanzania as a stable, resource-focused market. This isn't just a mine, it's a catalyst for broader socio-economic change that could reshape how Tanzanians view their natural wealth. Nyanzaga also fits into a larger continental shift. Across Africa, countries are rethinking how they manage resources. Few leaders capture this moment like Ibrahim Traore of Burkina Faso, whose message is blunt: Africa must stop exporting raw materials and importing poverty. He's pushed for national control, domestic processing, and new deals that put African interests first. Traore has taken a firm stand: resources must be processed locally, jobs must benefit citizens, and wealth should stay in the economy. His approach has struck a chord across Africa, where people have watched foreign firms profit while communities see little lasting change. Though Tanzania's Nyanzaga project is built on partnership rather than nationalization, The 20% government stake reflects a growing shift. Being just a tax collector is no longer enough. This marks a broader move toward what some call Africa's new resource playbook. The old model let foreign companies extract raw materials and send profits abroad. The new model demands local processing, ownership, and social investment. Deals are now judged not just by profit potential, but by their role in building long-term economic strength. Traore's rhetoric has gained traction, especially among young people and civil society groups pushing back against extractive, one-sided arrangements. Tanzania's decision to shape Nyanzaga as a locally beneficial, infrastructure-driven, and equity-sharing project reflects the broader shift happening across the continent. It's not as radical as Burkina Faso's model, but it aligns with growing calls for self-determination and fairer resource deals. There's also a psychological shift underway. For years, African governments hesitated to push for better terms, fearing they'd scare off investors. But leaders like Traore have helped change that narrative. Africa's resources are valuable, and global demand gives leverage, not weakness. Tanzania's stake in Nyanzaga, paired with its focus on community impact, shows that this new mindset is gaining ground in East Africa too. Some critics say Traore's approach could scare off investors, and in some cases, that may be true. But Tanzania offers a middle path. Companies like Perseus Mining still see opportunity, but within a framework that ensures long-term national benefit. Burkina Faso's assertive stance and Tanzania's negotiated model may differ in tone, but both reflect the same shift. Africa is no longer giving away its future for short-term gains. Traore's influence is changing the conversation. It's not just about what a country produces, but who benefits, who controls it, and how much value stays local. Nyanzaga may be less confrontational, but it's rooted in the same idea: resource deals as partnerships, not handovers. It's part of a broader movement where Africa is beginning to set its own terms for prosperity. The Nyanzaga Gold Mine is more than a milestone. It reflects a deeper shift in Tanzania and across Africa. After nearly 20 years without a major gold development, Tanzania is now leading a new model that blends foreign investment with national ownership and community impact. The benefits are clear. Steady gold revenues and dividends from the government's 20% stake give Tanzania greater fiscal flexibility, funding infrastructure, healthcare, education, and industry. With its long project timeline, Nyanzaga also brings economic stability in a typically volatile sector. But the real story is the shift in mindset. Tanzania is no longer accepting investor terms by default. It's negotiating deals that prioritize local value, a move away from past agreements that exported resources with little return. While not as bold as Traore's reforms in Burkina Faso, Nyanzaga reflects the same principle: Africa's wealth should drive African progress. Nyanzaga's impact goes beyond Tanzania. As other resource-rich African nations watch closely, many are asking tougher questions. Should we take equity stakes? Mandate local processing? Demand more for our communities? Tanzania's steady, negotiated approach could prove just as influential as Traore's more aggressive push for sovereignty. But success isn't guaranteed. Turning resource wealth into broad-based progress requires strong governance. Revenue transparency, accountability, and anti-corruption efforts will be key. Without them, even well-structured projects risk repeating old patterns: profits for a few, poverty for many. Tanzania has committed to environmental and social standards, but consistent follow-through will determine whether Nyanzaga becomes a benchmark or a warning. The global backdrop adds another layer. With gold demand rising amid economic and geopolitical uncertainty, Tanzania has a real opportunity. But that also brings more pressure from markets, partners, and competitors. How it manages this moment will shape whether Nyanzaga becomes a lasting national asset or just another missed chance. Then there's the bigger question: what future does Africa want for its resource wealth? Ibrahim Traore offers one answer: hard sovereignty, state control, and a firm stance against exploitation. Tanzania, through Nyanzaga, offers another: balanced partnerships that protect national interests while leveraging foreign expertise. Both challenge the outdated view of Africa as just a raw materials supplier. Both argue that natural wealth should fuel independence and development, not dependence. When the first gold bars emerge from Nyanzaga in 2027, Tanzania will have a chance to show what this new era looks like in action. Will it spark a broader rethink of how African nations work with global mining firms? Will it help accelerate the continent's move toward industrialization and self-reliance? These questions extend beyond one mine, but they're closely tied to it. One thing is clear: Africa's mining story is changing, and Tanzania is now at the center. Whether this becomes a lasting era of sovereignty and growth, or just another missed opportunity, will depend on the decisions made now, in Tanzania and across the continent. What's your take? Should more African nations follow Tanzania's balanced model or go the Traore route? Will this gold boom finally deliver real change on the ground? Drop your thoughts in the comments.